Hey everyone, welcome. So today we're diving into what our source material calls the secret sauce of trading. And that's all about mastering market structure across multiple time frames. Honestly, this is the key to trading with real clarity and confidence. Let's get right into it. So here's the game plan. We're going to start by busting a common myth, the one chart illusion. Then we'll uncover the core principle that really connects everything. After that, we'll build a framework, walk through a real trade example, and wrap it all up by talking about how to build a consistent process. All right, let's kick things off with a problem that, let's be honest, probably trips up almost every trader at some point. This idea of the one chart illusion. We're going to look at exactly why staring at just a single view can be so misleading. You've been there, right? I know I have. A trade looks absolutely perfect on your screen, you jump in, and then boom, the market just rips in the complete opposite direction. Well, a lot of the time, the reason is that your single chart simply wasn't showing you the bigger picture. And you know what? This iceberg analogy from our source material just nails it. That one big candle you're looking at, that's just the tip. What's hiding underneath the water? Well, that's where the real story is. The real driver of the market is often playing out on a time frame you're not even looking at. Okay, now let's get to the real aha moment of this whole analysis. This next concept, well, once you really get it, it completely changes how you see the charts. Forever. I'm gonna say that one more time because it is that important. A run on a higher time frame is a trend on a lower time frame. This simple sentence, this is the fractal nature of the market summed up perfectly. This is the key. So what does that actually look like in practice? Well, think about it like this. A run is just that one big push in one direction, right? An impulse. But a trend is a series of those runs, which creates that classic structure of higher highs and higher lows. It's a really simple distinction, but man, is it powerful. So we have the secret sauce. Now what do we do with it? Well, we stop letting our time frames fight with each other. Instead, we build a top-down system where they all work together, perfectly in sync. And the process is actually really simple and logical. We just start with the big picture to figure out the main story, and then we drill down step by step for our confirmation and our exact entry. It's all about creating a clear, repeatable process you can lean on. I love how this breaks it down. Think of it like a team, where each time frame has a very specific job. Your higher time frame, say the 4-hour, is the boss. It sets the overall direction. The medium time frame, like the 15-minute, is the manager. Its job is to tell us when the main trend is just taking a little break. And the lower time frame? That's your specialist, your sniper. Its job is to execute the plan with precision. Okay, theory is great and all, but let's see how this thing actually works in the real world. We're gonna walk through a trade step by step, so you can see exactly how these time frames work together to create a really solid, high probability setup. Okay, so let's set the scene. We look at our higher time frame, the 4-hour, and it's telling us a clear story. The market is bullish. It's pushing up. So right away, we know our main goal is to find a good reason to buy, not to sell. And here it is, the million-dollar question for anyone who trades with the trend. We know the market is going to pull back after making that new high, but if you buy too early, you just get crushed again and again. So how do you time it just right? This is where our medium time frame comes in to save the day. Remember our secret sauce? For the 4-hour chart to have a pullback, the 15-minute chart has to make it happen. And how does it do that? By creating its own little bearish trend. That shift on the 15-minute is our signal that the bigger pullback is officially on. Now here's the crucial part, the part that requires patience. We see that 15-minute bearish trend, and we just wait. We don't try to catch a falling knife. We wait for the 15-minute chart to break its own structure and switch back to bullish. That's it. That's our green light. That's the confirmation that the 4-hour pullback is probably over and the main trend is ready to resume. So now that we have the big boss and the manager in agreement, it's time to bring in this specialist. We drop down to our lower time frame, the 1-minute chart, and we use it like a microscope to find a super precise, low-risk entry point. This lets us get in with a really tight stop loss and gives us huge risk to reward potential for that next big wave up. So there you have it, a really powerful framework. But a tool is only as good as the person using it, right? So how do we actually make this work, trade after trade? Well, that brings us to our final and maybe the most important section. Here's a truth that's actually really freeing when you think about it. You cannot control what happens on any one trade. You just can't. But what you can control 100% is your own process. And by focusing on being consistent with your actions, you create the foundation for consistent results over time. And the difference is just night and day. Without a framework, you're bouncing around time frames, trying to force the charts to tell you what you want to hear. It's pure emotion, it's chaos. But with a framework like this, your analysis becomes objective. It becomes mechanical. There's no more guesswork. You just follow the process.
All right, let's boil this whole thing down. If you walk away with anything today, make it these 4 things. 1, the market is fractal. What happens on one level happens on all the others. 2, that magic sentence. A run on the higher time frame is a trend on the lower. 3, use a 3 time frame system and give each one a job. And 4, most importantly, consistency in your process is what leads to consistent results.
So I'll leave you with this final thought to chew on. This whole framework, it's all about making a fundamental shift. It's about moving away from trying to predict what the market will do and moving toward just listening to what the market is telling you. The goal isn't to be right, it's just to be in sync with the market's flow.